Good afternoon, this is Jack from theafterchart.net, and this is the afternoon recording for Tuesday the 20th of March. I'll disclaimer, we do this for educational purposes only. We're here to share our technical analysis with you. We hope you can take some of what we're doing, learn from it, transfer it to your own charts. We're not here to issue trading signals. Right, now, yes, obviously we came down yesterday, we ran into monthly pivot, and we are bouncing off the monthly pivot. A couple of things to mention here. One, this doesn't look complete to me. I'm expecting to see a little more upside for a number of reasons. Not a huge amount necessarily. I'd be surprised to see it break over the declining resistance, which I've got in about the 27.36 area currently. But I'm thinking a slightly better backtest of the daily middle band than we have seen so far. Not expecting to see an awful lot more, and I think this is likely to be a bear flag forming. The next move down, if we see a lower low and a rejection back up over this one, then we could actually have a low in. We're not expecting to see that. We're expecting to see monthly pivot broken, converted, and head down to the next area, which I think I've got in about the 26.40 area. Right, NQ. I'm going to have a quick look at the RTH charts just after this. NQ. Obviously, we've come down, we've reached 38.2, more or less bounced there exactly, forming what's likely to be a bear flag, probably going to go a bit higher again within that, and we shall see. So far, so good. I think one thing I would mention is that we've got FOMC tomorrow. Now, I don't think that's going to be bullish, and if they've got anything to say which has much of an impact on the market, then I suspect that's going to be bearish, because I think there's been a lot of numbers through which are suggesting strongly that they're not going to be slowing down with the raising of interest rates, and the next one's going to be pretty soon. But, could be mistaken. We shall see. You never quite know. There's a lot of random element to these things. What I would say is, I'm not seeing a likely low here without a full retest of this low. We just haven't got the RSI set up for it. Can it go without it? Yes, but it usually wouldn't. I.e. 80-85% wouldn't. So we are likely to see that retest. What matters is what happens there. In the short term, we are on a 15-minute buy signal. This looks like a bull flag forming, and we're starting to break up, I think, from that bull flag. We should do at least a retest of this high here. Probably going to get into the area which I was talking about yesterday before we broke up, which is the 26 to 30 area, and possibly a little higher than that. I've got the SPX daily middle band currently at 27.34. On ES, that's about 27.28. So it's in the right kind of area. The ES daily middle band is a bit higher than that. Right, NDX. NDX on the daily chart. I just want to mention the middle band, possible resistance here. That's in the 69.26 area. And on the 60-minute chart, obviously we made the target, but again, exactly the same thing would apply. We should retest the low. By the way, I also heard, while we're doing NDX, I'll just come back to it straight after RUT, but I'll load the chart now. I had a question about Facebook yesterday, and I just want to follow up on that one today. But let's have a look at RUT. RUT, the 60-minute sell signal made target. Not expecting to see a move up without the low. Declining resistance, haven't got a marked in. It's not far above. Again, forming a flag. I'm expecting to see a higher high for this little rally. And then... not too long after that, I'm expecting to see a fell. Is that fell going to be before or during or after FOMC? Hard to say. FOMC is tomorrow. Could be any combination of those things. Let's have a quick look at Facebook. Facebook, there's an awful lot of stuff about how they really dropped the ball with this, and obviously this was a mistake. I think the main reason we were dropping like this in this sort of time frame is I've actually been watching this head and shoulders form for weeks. And we'd gone up to the ideal right shoulder area, a tad higher, and we were going down. We have now broken down below the head and shoulder neckline. This fixes, if this is sustained, and if it can get through rising support, which is a significant level in the 154 area approximately, then I've got the target in the 139 area, and I don't think it would be about this instant at the weekend. That's just return to the mean, usual stuff. That would get us also almost to the 50% retracement if we get down here, and pretty close to 38 if this holds a support. This should break, really, but I don't want to assume it's going to. If we were to see a reversal up from here directly, which I'm not seeing any obvious sign of, but this could be a Janus flag and take us back to a retest of the high in what then would probably be the second high of a double top. But I'm not making any assumptions at the moment. At the moment, it's come down, it's broken the neckline, everything is proceeding as planned. Obviously, if Facebook goes down while everything else is going down, that's certainly not going to hurt. Right, DX.